Hello, welcome to IGTV. I'm Angeline Ong, and this is your look ahead to the week starting the 27th of March 2023. Now, first up, we've got a huge amount of stuff coming through on the economic front, starting in China with industrial numbers there. Also from Germany, watch out for the IFO. The latest reading from the IFO could give us a better idea of what investor morale is like over there, given that we've seen Christine Lagarde courageously going ahead with that interest rate hike despite the ongoing turmoil in the banking sector. Also, we have the CBI data, distributive trades data, coming out of the UK. And from the US, look out for Fed manufacturing data out of Dallas. That's on Monday. Let's look ahead to Tuesday, where we have numbers from Australia in the form of retail sales and business confidence data out of France as well. And from the US, wholesale inventories, the S&P Case-Shiller homes data, consumer confidence data, and also crude oil inventory data too. Midweek, we've got quite a heavy schedule as well in terms of data from Germany. This is the GfK consumer confidence number. We've got numbers out today from the UK on that front, which showed that consumers held up pretty well despite the cost of living crisis. Similarly, in France, we get that reading as well. And from the US, pending home sales and more crude oil inventory data, this time from the EIA. On Thursday, we've got numbers then from Germany in the form of CPI and initial jobless claims from the US and GDP numbers. This is the final print for the fourth quarter. And on Friday, it quietens down ever so slightly, but not much. Manufacturing details from China, retail sales numbers from Germany, and Q4 GDP growth numbers from the UK, as well as the PCE from the US and the Baker Hughes oil report. Let's cross over now to Axel Rudolph, Chief Technical Analyst at IG, to find out what he's looking at in terms of the technical viewpoint based on that PCE data.
Well, I thought the S&P 500 would be quite interesting because obviously the PCE price data, the inflation data, that is the preferred one that the Fed looks at, might give us a good indication of what it is likely to continue to do with regards to its monetary policy. So if you look at the S&P 500, I've got the daily financial bet up here, and the key levels for me to watch out for are basically the December low and also the low seen in mid-March of this year between 3,809 and 3,764. Because if that support zone were to give way on a daily closing basis, I think the odds would be pretty high that we could slide all the way back down again to the October low of 3,491. So it's really critical support for the bulls with regards to what is likely to happen going forward. And for the bulls to be back in control, what we need to see is not only this support holding, but also the S&P 500 rising above this week's high at 4,040 on a daily closing basis. If that were to happen, I think the October to March uptrend could then continue and take us to above the highs seen in February, above the 4,195 level.
Well, thank you very much. We'll come straight back to you. Just checking on the S&P there, year to date up 2.8% so far. On the corporate front, it's equally as busy. We have first half earnings from Bellway, Ocado and Walgreens Boots out with quarterly earnings, as well as Micron Technologies from the US. Then on Wednesday, it quietens down a bit with earnings from Next. And on Thursday is when we see the deluge. We've got numbers from Moonpig, trading statement there, and fourth quarter earnings from Kazoo, and first quarter earnings from H&M. So, Axel, what is the key trade here from the corporate side of things next week?
Probably Bellway, one of the UK house builders, as we know, because on Tuesday with the first half earnings, we could see whether we may be able to break out of the current downtrend we have been trading in. I've got this downtrend channel drawn on this daily financial bet since the beginning of the month. And currently it's quite interesting because we're trading around the red line here, which is the 200-day simple moving average at 2007 pence. So it'll be interesting to see whether the earnings will either push us back above the high seen of the last week or so, and that's around the 2075 pence mark, in which case we would be breaking out of this downward channel to the upside and likely be heading back up again towards the February high 2260p. But if earnings were to disappoint, and if we were to not only slide through the 200-day moving average, but also this week's low at 1966p, we could then head back down again towards the December low at 1,832 pence. So it'll really be interesting whether the stock will go back down below the 200-day simple moving average, which is considered to be bearish, or whether it can manage to stay above it, in which case maybe we could see a reversal to the upside and further upside to be seen in the days and weeks ahead.
Thanks very much, Axel. Of course, it also depends on what the Bank of England does, because if they continue to tweak up interest rates, it would make home loans more expensive and further driving home buyers away. And that's your look ahead to the coming week. Until then, I hope you have a good weekend. I'm Angeline Ong for IGTV.